Now, which of the banks should you buy? Is it UOB, is it OCBC, or is it DBS? Now, this is a common question, and in my opinion, if you're not sure, as always, might as well buy STI index because it gets you all three banks at one go. But if you really want to stock pick, maybe this discussion really shapes how you understand their business operations. Firstly, I'll cover with you UOB. UOB has a very interesting strategy in Southeast Asia, and they have a new development going on in Indonesia. I'll touch a bit on that for you. Second part of the video, I'll be covering on OCBC. OCBC is slightly different from the other two. It has a very interesting insurance arm that contributes profitability and revenue to the business group itself. And last but not least, I'll be covering with you DBS. In my opinion, DBS seems to be the most innovative and is the largest of the three banks. And towards the end of the video, I'll also be sharing with you which of these three is my personal preference. So if this interests you, continue watching on. Hi guys, welcome back. Now to start things with, let me cover the similarities between these three banks. And these three banks see a similar net interest margin. Banks, they borrow money from you when they take on your deposits, and they lend monies to corporations and individuals. So the difference is called net interest margin, and most of the banks, it is always the core to the business itself. And as I can show you over here, the net interest margin is very similar across all three banks. 1.53 for DBS, 1.54 for OCBC, and 1.53 for UOB. Very, very similar in that sense. But again, there'll be differences which I'll be covering with you in a while. So that leads to the next question. Will these three banks all see an impact to profitability, especially with digital bank coming on in 2022? Now, we do know there are winners already. For the personal banking space, there is Grab plus Singtel and SCA, which runs Shopee. And for the wholesale banking side, they're going to be up against Ant Financial. So definitely competition is coming about. But to answer that question, I have actually a previous tutorial as to why I believe our three Singapore incumbent banks are actually very solid and very prepared, in my opinion, for this upcoming competition. But I have further interesting information to share with you. This is by Senior Mr. Tharman, who is also in charge of MES. As we can see over there, it's also mentioned already that the digital banks must not engage in value-destructive competition to gain market share. This is already broadcasted before, which means it's not possible for the new digital bank to throw special rates, ridiculous rates to bring in customers unnecessarily, because banks have been regulated by MES, and MES does not want that to happen. That is value destruction. At the start when Uber and Grab were making that intense competition for market leadership, they were throwing coupons, they were cutting costs so much until they both lost money. That's why they had to do a merger. But I believe digital banks are not allowed to do so. So again, that is the main question that you may have I'd like to address for you. Digital banks, while they provide competition, are not going to really impact the three banks that much also, in my opinion. Now, the three banks also have a very strong similarity, which is the three of them all drive majority of income from Singapore. While they are expanding overseas, the majority comes from Singapore, which means Singapore's business is very core to its profitability. With that, I'll move on to the differences and each and everyone's strategy. Now, up first is UOB, and UOB is actually the smallest of the three banks. Now, I've actually heard before a few investors, when they decide to buy between UOB and DBS, they choose who's cheaper on the day, and that's absolutely not the right idea to go with. Simply because while they appear the same price on the stock market, the market capitalization is very different. UOB is only 2/3 the size of DBS. Now, UOB also approaches its business very different from DBS, which I'll cover towards the end of the video. UOB has 57% in Singapore, correct? But the interesting part which I'd like to circle for you over here is Southeast Asia. It has 27% coming from Southeast Asia, which includes Malaysia, Thailand, and Indonesia. The other two banks don't focus so much in Southeast Asia, so UOB is really trying to do a Southeast Asia strategy, and they don't do a lot of M&As. They've been growing organically within Southeast Asia itself. And there's an interesting development within UOB which I'd like to share with you, just in case you haven't seen it. Take a look at this. This is actually TMRW. This is a digital bank they are trying to do in Thailand and Indonesia. Of course, they're not doing digital bank in Singapore, but in these two countries, they're actually doing a digital bank, and that is actually a possible growth driver for UOB in the next coming years. Now, up next is OCBC, number 2 of the 3 banks in terms of market capitalization, and I'll try to help you understand the similarities and differences. The first graph you should note is actually where is the profits coming from based on geography. As you can see in this graph, 55% comes from Singapore and 14% comes from Malaysia, correct? And this has similarities to UOB. But the key difference is Greater China. OCBC derives 20% from Greater China, and in particular, the reason is because is done an acquisition for Wing Hang Bank. As I can show you in this article itself, Wing Hang Bank may contribute more to OCBC Group in the coming years ahead. Another key difference between OCBC and the other two banks is actually the non-interest income, the percentage of it. So as you can see, as I've circled, OCBC derives about 40% from non-interest income. And do you know a key reason for that? It's because it has quite a bit coming from insurance. Great Eastern is a subsidiary of OCBC. 87% of Great Eastern is owned by OCBC. And that's why the contribution from that segment really changes its profile by quite a bit. It's quite a high non-interest income. And just in case you think that insurance is very slow growth and stuff, let me show you how much of a cash cow it can actually be. 10% of total revenue is contributed by insurance, but about 18% of net profits is actually contributed by insurance. So insurance is really a cash cow that OCBC is milking on, and that's a key consideration if you want to invest into OCBC. Now, last but not least is DBS Bank, the biggest of the three and actually the biggest in Southeast Asia. Before we get there, smash your like button so your mom you can see valuable content like this. And again, if you haven't subscribed, inviting you to press on subscribe to join our family, become more financially savvy. Now let me show you this chart over here which explains a lot of things. DBS actually derives a lot from Singapore, 63%, which is the biggest across the three banks. So if you believe digital banks is going to really impact Singapore itself, DBS actually has 63% coming from Singapore. Now, the other components for DBS is actually 27% from Greater China, which is the biggest across the three. And Greater China can be described as mainland China, Hong Kong and Taiwan. Taiwan, they've actually bought Doha Bank a couple of years back. Now, it seems like DBS is also focusing on a new thing, which is India. India, they've actually done DG Bank before, a digital bank, quite a few years back. But recently, last month, November, they've actually bought a distressed bank, Lakshmi Vilas Bank. So DBS is really keen to break into the India market, and maybe if it does, it could be a growth segment. Now, since you stayed here, let me share with you my personal preference. And before you buy and sell any particular share, make sure you've seen valuations, make sure it fits your risk appetite, and make sure you have really considered all angles such as price to book, what kind of price you're buying at, as well as what kind of interest you have in the business itself. Now, my personal preference is actually DBS Bank, and not surprisingly, DBS has shown quite a few good things that I'd like to share with you also. The first is actually, it's shown the highest growth in terms of wealth management fees. Wealth management services is a very sticky business and a highly profitable one. And as you can see in this summary done by CIMB, it has 4 times growth over the last 10 years for its wealth management fees. This is way faster than OCBC, which has Bank of Singapore, and UOB itself. So I believe that could really drive profitability still for the coming years ahead. And if you look at the numbers itself, DBS does indeed have the highest earnings per share growth. It also has the best return on equity across the three banks. So if there's a chance valuations come down, I'll be the most interested by DBS. Not only that, I've seen DBS communicate before that they are keen to collect blockchain related service fees. They're looking in terms of that direction, which suggests to me they are very tech savvy. They have a tech culture within it. And not only that, they've actually set up a digital exchange. As of now, this is quite a new concept. We don't know how big it can grow, but I do believe that there's a lot of potential because cryptocurrency exchanges are now separately handled. No bank has really done a cryptocurrency exchange, and DBS offering this could be a revolutionary product in the coming years ahead. So hopefully this has benefited you in some way. And again, if you're not sure, always buy the STI index because it gives you exposure to all three banks, a much simpler approach. And if you haven't seen a previous video, let me introduce you to this. I believe that STI could really rebound in 2021, and it really is diversified and a very simple approach to getting invested. So let me introduce you to this tutorial, and with that, I'll sign off from here. Take care and goodbye.